80,000 Bitcoin have been sold at once on exchanges, and people got freaked out because it was a Satoshi-Era wallet from, I believe, around 2011. And people just are thinking, they have a lot of discussion online. So are they actually losing faith in the asset? So let's discuss about that. So first off, it was an interesting. We got a lot of discussion on Twitter, X, or whatever you want to call it, and people were just freaked out by $9 billion, around 80,000 Bitcoin being sold via Galaxy Digital. So it would be, for sure, it's an early Bitcoin investor, and I think he has purchased it for around over 30 cents per coin, so one of the highest return of investments ever on anything that he could do, and a lot of on-chain analysis showing that they have transferred that amount onto an exchange and they were sold, and there was a withdrawal of around $1.15 billion, and so Galaxy Digital still holds 18,000 Bitcoin as we speak, so around a little over $2 billion. So this here created a lot of discussion. So what is actually going on? So it was part. I mean, we had the official explanation was more about estate planning per se, or something that was already pre-planned based on specific scenarios on Bitcoin than just OGs, so to speak, losing faith in the asset. But what I would like to talk about today is that it doesn't really matter if you understand the fundamentals of Bitcoin. And the most interesting part that I thought, I mean, just look at the charts. So if we go here on the long-term chart, so could you actually guess where this, when this actually happened by just looking at this chart, this longer-term chart? I guess not. So we're still here. So which is absolutely amazing. So this basically means that Bitcoin is just consolidating itself as a global asset, as a global commodity-like asset that anyone can use. But at the same time, a lot of people say, look, people are just dumping Bitcoin. But for you to dump something, somebody else needs to be on the other side of the trade and actually purchase it. So that actually shows that the whole asset got absolutely absorbed. So when you see Bitcoin rebounding after that kind of sell, which would normally create way more turbulence, so when it does not create that much of a price fluctuation, where you see Bitcoin coming back to the 118,000 that it is right now, so you see that liquidity is what matters. So you have so it supports the idea that even if Satoshi himself shows up and all of a sudden you have maybe a more significant amount, maybe 100,000, maybe 200,000, who knows? That could happen for sure. Nobody knows who he is or who they are, right? So it just shows how resilient the fundamentals are, and liquidity is really what matters here. Because even if one person has decided to actually sell those coins, you have a whole other market and a lot of stuff going on at the same time. So we did discuss that in our latest BI report, because if you just see the stablecoin law passing, so the Genius Act bringing a lot of clarity and also a lot of liquidity into Bitcoin. You see ETFs going on. You see a whole liquidity play on global printing coming from the US, from China, also from Japan, since everybody's going to need to stimulate the economy, and also yields surging in many places like Japan, for example. So they're looking towards safer havens, and Bitcoin is being chosen as one of those. So we have a lot of details that we provided in our latest report as well. If you want to have a look at it, you can act on it. You can for sure act on your investments on Bitcoin. Everything that actually relates to your decisions on buying, accumulating, or part of your strategy. So we have everything here, many charts, and also the part here that I contribute, monetary mechanics, showing exactly how the pipes of liquidity worldwide actually provide a way to understand what actually happens to Bitcoin. So links are on the description below as well if you want to have a look. So basically, if you see everything that is happening right now with the United States providing liquidity, Japan providing liquidity, because a lot of the deflation going on, inflation going on over there, but in a more artificial way, based on the FX risk, and also China and a deflationary spiral that also requires a lot of liquidity. It's basically what drives the market. So you see here that it really hasn't budged at all. And this is absolutely fascinating to see, because it's more and more of a decoupling of it just being a leverage play on NASDAQ, for example, in the United States. So those liquidity plays are really consolidating Bitcoin. Gold as well, of course, it's not the only asset, but those two assets are being chosen by the market as safer havens. Of course, gold has a way longer history than Bitcoin, but Bitcoin is getting there pretty quickly, and everything like Bitcoin, it just grows absolutely exponentially. But of course, ups and downs are always possible, but it's all about the liquidity that it provides. And ETFs are playing a big role there. Retail is lagging on this cycle, I might say. So this is way more of an institutional play, but the United States are just leading the way for many other countries to follow as well. So very interesting scenario here that just allows for 80,000 Bitcoin to be absolutely absorbed here on a almost invisible top if you compare to other years as well. Maybe if you just zoom in, you see it's just, I mean, it just disappears. So pretty interesting scenario, especially when you compare to 2022, as I still remember when it was 15,000. So just shy of 3 years ago. It's absolutely astounding. So this is really a change of how this asset is just becoming several things at the same time. So especially when I focus on macroeconomics and the pipeline or the plumbing of the monetary system, with repo, with money printing, with bonds, and everything related. So Bitcoin is just getting more and more important, allowing it to create that deep of a pool. All right, guys. See you in the next video.